Good morning, folks. This is Naim Azam, Chief Market Analyst at EverTrade, and welcome to our daily technical analysis video, in which we will be looking at gold prices, because obviously gold prices have been trading lower for the last few days, and this is despite the fact that we have weakness in the dollar index as well. So let's have a conversation around this. Before we continue, as always, it is important for me to go through this disclaimer, and anything which will be discussed cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, what we're going to do is we're going to bring out the MT4 platform, which can be downloaded from our website. So what we're going to do is we are going to look at gold prices by going right over here. I'm going to click over here, and then that's where the gold price is going to be shown on the chart. Now, first of all, what you see from the chart is that this over here is our all-time high, which is also our resistance zone, meaning that was the area, that is the area, in fact, where the prices are likely to retrace, because this is your all-time high. In addition to that, we have another resistance zone, which is right over here, the previous where the prices started to sell off, and then it started to go back, and then it went back into this area of resistance, and then we experienced another sell-off. Now, more recently, what has really happened in terms of a gold price really is that the price has challenged this particular pink line, which, by the way, represents your 50-day simple moving average, and this one in yellow is your 100-day simple moving average, and finally your 200-day simple moving average. Now, clearly the price tried its best. It tried to break right over here, but it failed. And then it tried to break right over here as well, as you can see, but it failed again. And then the price had another test of this, but it failed again, and now the price is clearly starting to trade below that. Previously, the price was able to break above the 50-day simple moving average, and also above the 100-day simple moving average, which was very, very positive. It pushed the prices to our defined resistance zone, and then we experienced this one of the big sell-off, which wasn't experienced in several months. But after that, when we look at the price action, all of these price action with respect to this particular candle, what we can see is that the price is still very much is trading in a range which is defined by this particular candle. What do I mean by that? Sorry, not this one. Let me delete this one. We don't really need that. So what I mean by that is, let me draw this area, is defined by the highs and the lows of this particular candle. So look at this. So this is the high and this is the low. So the price is very much still trading within the range of this particular candle, which, by the way, this particular move was $80. Now, in terms of a retracement, we can say that we retraced maximum up to 40%, and then the market started to sell off again. So the important area in terms of a price action really is this particular low, which is right over here. If the price breaks below this price, this particular support line, then the next area of support is really going to be our 200-day simple moving average. But if the price breaks below the 200-day simple moving average and it stays below that, then it really means that the price is very much going to look at its next area of support, its next area of buy zone, in other words, which could potentially be just in around this area. Just in around this area. So very likely that if the price breaks from its current price point and then it comes into this area, then what we could see is potentially from there onwards, we could potentially see is a bounce which could push the market back towards the upside, so like this. But we don't know, because equally what can happen within the same price area is that the price, rather than breaking up, it can break to the downside as well. So how low the price can really go? Price can come into this area of support, which comes right from here, which is in around 1749. So overall, we are trading within a very critical zone, as we can see from the chart, because if the price the choice is that the price first of all needs to stay above the low of this candle. The other is that the price needs to stay above the 200 simple moving average. If it breaks like that, the way that I've drawn the candle, it can come into this support area, and then we can see the bounce. But if that doesn't happen, then it can equally go into the next area of support. Now what we can do is we can label some of these areas on the chart so that for you to understand what is this. So sorry, erase this drawing. Oh, it's taken all the drawings out. God. Okay. Well, anyways, I'm sure that you guys know with respect to that what I was really discussing them. So the lower was the lower support area, and then there was next support area. And in terms of the RSI, what we are really looking at is that the price is coming again towards its oversold area of 30, which is very likely to push the markets higher. The RSI higher, because soon the RSI will drop over here like it did right over this particular point. We saw this surge after the market, and we also saw the surge in RSI as well. So potentially a similar move can very much happen right over here too, when the RSI and the price drops to this particular zone. All right, that's all for today, and I'll see you guys next time.